welcome back to the second segment of episode 148 of Sold with Updike Pugh. Today we are going to talk about kind of a market update year to date, comparing last year, or really the last couple of years to this year.
It's a lot of information. These slides are meaty, and I had to make my own notes on these things so that I could keep up because there's a lot to talk about on these slides.
There is, and we asked Zach to kind of shade in on these, kind of showing you where the pandemic was, where the presidential election was in that during that time, and we did that only because around election time the market tends to slow down a bit. It has always done that every 4 years. Yeah, it just tends to slow down. But then we also had to deal with this overlaying pandemic, and nobody knew where that was going to go.
And it got really confusing. And so as we look on the first slide, we're going to talk about new listings. And so you can see these are all going to be the same. This is data that was pulled out of MLS over the last, well, let's say we started in 2018 till just last month, I believe is when it ended. And so you can see here that both 18 and 19, the way those peaks and valleys, they are almost mirror images of each other. And so that's really one of those things that is a good baseline for us to look at. And then we look at 2019 and 2020 and see how different things got.
Yeah, in you can see right toward the end of the year in both 19 and 20 where the new listing inventory dropped down to about 8,000 new listings that month. And then every year it kind of comes right back up. And this year in 2020, we didn't quite see that go back up as high as we normally do. And then in 2021, the first quarter of the year really got thrown off because of the start of the pandemic.
And it's interesting because so much of this inventory, the highs were at, what does it say, like 17,000, both in 18 and 19. And then look how it drops off to below 16 in 2019, and just barely over that in 2020.
Yeah, it's so we've definitely seen that new listing inventory shift. Let's jump on to the next slide, and this is going to be the inventory of homes for sale, and I think this pretty much tells the story right here.
This is when things are, if we go, let's start at 2018 and 2019. You can see there that they're almost the exact same shape in the curve, but you can see there that we have an increase of about 2,000, which is a normal number to increase by in 2019 over 20, but then it all falls apart right when that pandemic starts.
It really did. And then as the pandemic began to take hold, that was where the inventory of homes just really started falling off.
And this is where we begin talking about your freshman year of business, when they talked about the supply of law and demand. And here we go, because as you can see, we're having a huge drop off, and it continues from 2019 into 2020, where it really settles between like 12 and 13,000 new homes, which is, when we were seeing that, it was, what was it, a month and 1.4 months that we had of inventory at that point.
Yeah. And moving on to the next slide, where we talk about the closed sales. And you can see that the number of, I should have overlaid some of these slides, but that would have probably been a little bit more.
We'll do it again later.
Yeah, but when you look at the closed sale activity here, you can see that the closings were still happening. But you could also see in that previous slide how the inventory was so much smaller, because the slide prior to that was, the new listings, and those weren't happening.
Exactly. So you're talking about in 2019, where you see that huge peak that's right about 15,000, and that absorption rate, if we were able to overlay, as Jeff said, the slide before, you would see how the inventory just really begins to just have a free fall. And so we've got these huge absorption rates. Actually, if you look at the absorption rate for 2020, it's actually higher by 5,000 in 2019 and about 6,000 over 2018. And those had really healthy inventories. And so this is just a multiplier that we have never seen before in our market.
And so because of all of that supply and demand, as we move on to the next slide, we can see how that average sales price in our market has just gone up and gone up and gone up.
And it's a good 2018, 2019. You can see how it's kind of the normal cyclical pattern that we see there. But then it just gets fractured, and it's I guess, a stutter step, because when that pandemic happened, it all shut down. And that was actually when I sold Manette. And I sold Manette as fast as I could that one weekend when we reopened the economy for that split second. And we threw it on and sold it for, what was it, 10 or 15,000 more than the other side did just 45 days earlier. So that shows you where that huge little jump first began in 2020. And then in 2021 is when it really started to accelerate.
So in August of 2021, we hit an all-time average sales price high of $423,000.
But if you think about that, Jeff, and really like factor in where does that put us, like in the top 10 metroplexes in the United States, we're still not that expensive at that rate.
That's true. That is, some people ask for what the explanation for all of this is, and I look at it kind of like we have lived in Texas very inexpensively for a very, very long time
So long.
in terms of housing.
Correct.
And now we are beginning to see that correction upward because we've become a bigger metropolitan area. We're on par with much bigger cities now, and the cost of living just is going to be higher.
The economy has been really healthy for a while, and so people have had some money here in Dallas to spend it up on those prices.
And as the result of sales prices going up, you can see on our next slide, the median days on market has really gone way down, which in turn affects the inventory in terms of the months of inventory that are left.
And typically your longest days on market would be between December and February. And it looks like if you look back in 2019, we were probably about 35 days on the market. Move over to 2020, it's about 42 days on the market. And then you see that drop. And we get down to about 19 days on the market in 2021. And I don't know what it really is right now.
It is interesting because the days on market is something that you have to take with a little bit of a grain of salt, because this does not have the influence of off-market sales.
Correct.
But it does have the influence of many new construction homes that are put into MLS before the ground is even broken, and then they may not sell for a year, and so you've got those outliers that aren't necessarily
Accurate.
the same as everything else that you're comparing it to. So it's a good rule of thumb, but it's not something to really put everything on.
It's a guideline. And the other thing too is not everybody puts it as changes the status the day of execution.
Yes.
There can be a drag. Often there is a drag.
And so our last slide is the median sales price. And this is also, as you can tell, in August, we set another record with a median sales price of right at $340,000.
So that is very interesting that the median and the average are that far apart. I always feel like whenever you and I do this, when we're doing comp data for our clients, that they're usually within 2,000 to maybe 6,000 on the high. This is because we're taking all of MLS into consideration.
Yes, that is correct.
So
Yeah.
it's
And
just
our-
different.
Yeah, and our MLS is extremely large. We're, I think, the 5th largest or the 7th largest MLS in the country. We've got about 50,000 subscribers, 40 to 50,000 subscribers, I believe.
That's enormous.
And it is, and it's been, the real estate market always needs people to come into it, like every industry. It always needs new people to come in. It is one of those industries where about 80% of the people don't renew their license a second time because it looks very different on the outside than it is on the inside.
It feels a lot different financially that first 2 years, actually 3 years, I would say. So very interesting data, lots of it.
I hope that you enjoyed that. I hope there was some information that you could actually use there. If there is other detailed information that you'd like, we have the ability to break this down to, like a monthly number if need. I could send you 32 other charts if you really want. So,
Someone ask for that, please. Well, thank y'all so much for tuning in. And just remember, we want to be your realtors for life.